It is Tuesday, October 6th. We are 4 hours into trading. Let's see what the market's doing. We've had a little bit of choppy price action today. It's been excellent for day trading. Decent movement, decent trends both ways. You can see that the market early today tried to get out of the gate and it tried to rally up above the prior day's high. It did so, but then we started to see some long tails above body and we had a bearish 1OP cross right in here. We had a little one right in here, which is right at that level there. Perfect. And you see the market coming in. We had a little bullish cross right about in here. And then we had another one right in here. That ended up being a really good entry point on that second one right in there. And you can see how the market's been rising since then. Challenged the high just now. I think this is a shorting opportunity. So let me spend a little bit of time on trading the S&P 500 futures. This 1OP indicator is all you need to trade the futures. It's all I use. Look at that beautiful buy signal right in there yesterday. Perfect. So here's what I saw developing today. We had this nice drop and then an immediate bounce, but long tails above body, and that told me that the sellers were still in control. We came down. Now we had 1, 2, 3 tests of the low. As I'd mentioned to members in the chat room, we got this tiny little bounce right here, and I said, okay, if this ends up challenging that low of the day, we're going to see a long red candle, and we're going to see another bar after that that triggers all of the sell stops. So anybody that bought here, here, here had their sell stop orders at the low of the day. Well, they got shaken out. Now the next part of this equation is critical. So what you don't want to see if you're a bull is you don't want to see another red candle and another red candle soon after. That is follow through, and that's a sign that this drop was bona fide and that this downward sloping trend line would be intact for most of the day and that we would be likely in a bearish trend day. That didn't happen though. The other thing that I'd mentioned was watch. If we don't get any follow through and boom, boom, we're right back above this prior day low, then the market's going to rebound. And that happened to coincide with this 1OP bullish cross right in there. We got long. That was an excellent trade. Now we're actually on exactly the other side of the coin here. So we have this nice compression right here for 4 bars. We're right close to the high of the day, and then boom, lift off with a long green candle. Well, what that does is that shakes out anybody who had been shorting on the prior high of the day. High, next high. You can see that that was a resistance level. And what you do not want as a bullish trader is a breakout like this. A pause for 1 bar is okay, but then you've got to have instant follow through. If you don't, you're going to be retracing, and once half of that long green candle is given up, you can expect follow through selling on the downside. And oh yeah, by the way, look at this. We have a bearish 1OP cross. So that also tells me that the market's likely to go lower. And oh yeah, look at this. We have a bearish hammer, an inverted hammer. We're going to be heading down while I record this video. And we're through that halfway point right there, and we're below the high of the day, the prior high of the day. So it's kind of all systems go. And then once the low of this long green bar is taken out, the open right here, once that level is breached, then you're going to see some follow through selling on the downside. So how can I trade this with that level of confidence? How do I know what's going to happen day to day and minute by minute? Well, first of all, I've got my 1OP indicator that I've been referencing. The second thing is let's go into a daily chart. Look what's been happening on a daily chart. Tiny candle, tiny candle, tiny candle, tiny candle. All of these are very, very small candles. So what does that mean? What does that tell me? First of all, the market really hasn't moved that much in the last week and a half. And when it does, it has these little gaps up and then very tight trading ranges throughout the course of the day. Well, today we opened pretty close to flat on the day, and so we can expect movement above and movement below, but a trading range nonetheless. And that's exactly what we've had. We've had choppy trading, lots of green candles and red candles intermixed, not a lot of price action or momentum either way. So that's what we can expect is range bound trading, where we test the highs and we test the lows with frequency, and then we end up somewhere in the middle of the range. Now, the one positive for the market is that there are still stimulus bill conversations that are taking place. That's all the market cares about. It's just chopping around, biding some time, hoping that politicians can get their act together and that they can actually get a stimulus bill done. If that happens, we're going to see a nice market rally. So to be short right now, there's added risk because into elections, both parties want to look like the good guy. They want to get a deal done. So any positive news could spark instant buying. And if you're short, you could get really burned by that type of move. So I think shorts in general are relatively passive right now. So we're going to be taking a look at the long side because, as you know from my prior videos, I like the fact that the market's been able to rally above the 50-day moving average. I like that bounce off of the 100-day moving average. That's the 100-day, that's the 50-day. We're above it. Use the 50-day moving average as your guide. As long as we're above it, stay long, favor the long side. We've also got this downward sloping trend line that's been breached to the upside. Everything looks pretty good right now. So we're going to be selling some out of the money bullish put spreads. Wanted to give you a lesson on day trading the S&P 500 E-mini. That's how I've been trading it today. And I'm going to show you a nice trade that's set up using the custom search. And I'm going to pop that up, bring it into view, take a look at a trade. So the criteria I used were option liquidity, 1 or better. That means these options are going to be liquid. Pre-earnings bull, we know that over the course of the last 3 years, these stocks, once they're inside of that 2-week window before earnings announcement, they have a better than 75% chance of rallying. This is 12 quarters worth of data. I didn't go back more than 12 quarters because I feel that you start to lose some of the relevance if you go way, way back. 3 years seems to be a nice sample. We've got more than 10 samples, which is statistically significant. We got 3 years worth of data, and that has actually worked very, very well for our purposes. So we know that once these stocks get inside that 2-week window, they have a tendency to rally. So what I did was I went a little bit further out in time. I want a stock that announces after October 26th. Why? Because that gives me 2 expiration dates that I can sell option premium on, weekly options. And I want to make sure that these options expire before that earnings announcement. And so I went out a little bit further to November 6th for my end date. And I wanted to make sure that there are weekly options. And then finally, one of the edges that we have is we like to trade relative strength. So I have relative strength marked on a 2-hour, 4-hour, and a daily basis. These are my candidates, and these are some really nice stocks. But I'm going to focus on one of them. And as I went through the list, I saw one that I liked. Actually, I saw a number of them that I liked, but I'm only going to give you one pick, so I can keep these videos relatively short. GLW, I like it. You can see how it's gotten through this resistance level right here. That's where it opened. The stock is currently on its high of the day. Let's take a look at the price action during the course of the day. Here you can see relative strength. Let's put up the SPY overlay. When the market came in, you can see how the market sold off. What did the stock do? Compressed, compressed, compressed. It even moved a little bit higher. That told me that it's got really nice relative strength today. You can see how it easily got through that prior high from yesterday, and it's continued to build on that momentum. We also know that it likes to rally into earnings. So I'm going to take off that S&P overlay, and I'm going to go into the D1 chart. I'm going to hover over the E. It announces earnings on 10/27. So we must pick an expiration date before 10/27. So I'm going to go into trade. And some people ask me, Pete, this stock's going to rally into earnings. Why aren't you buying calls on this? You could. It's a riskier play, though, because I know that the stock rallies into earnings announcements. What if it just sits flat and inches a nickel or a dime higher? It would still meet that criteria. I want to make sure that I'm giving myself as much of a probability of success as I possibly can. Could you buy the stock? Could you let it grind higher? Yes. Could you buy in the money calls? Yes, you could. You would better make sure that you got a nice market tailwind. I don't feel that confident that we have that market tailwind right now. Everything's shaping up great, but let's say that the stimulus bill falls apart and both sides stop talking. Let's say another week goes by and now both sides are thinking, well, we're so close to the election, let's just get through the election and then we'll figure out what we want to do. Things like that would really throw a wrench into all of this because the market would fall below the 50-day moving average, probably test the 100-day moving average. These types of plays would be in jeopardy, even with their strong bias into earnings. That's why I would prefer to sell time premium, let time premium decay, work in my favor. So if you're that bullish, you think the deal's going to get done, you want to buy call options, you certainly have probability on your side with these trades as well. For sure, you can do that trade. Now, if you're buying options, those you want to make sure span the earnings announcement date. They expire after the earnings announcement date because you want to retain that time premium and you want to retain that implied volatility going into the number, but you do want to exit before the announcement. I had mentioned that in yesterday's video. So let's take a look at what we've got. If I look at this stock right here, I really like this gap and the stock holding that gap, which puts us right at about 3250 would be fine. This is 3280 right in here. So 3250 is actually below that level. This gives me a number of different support levels that I can lean on. Well, what are those support levels? Well, first of all, you've got this high, which is actually the opening from today. That would be the first line of support. The second line of support would be the open from the prior day, and then you're down to the 3250 level. So let's take a look at what we've got in terms of options. We're going to go out to the expiration cycle October 23rd, which is before the 27th. And we're going to go down to the 3250 strike price. And we'll click on the bid there. And we'll click on the ask for the $32 puts. I have 50 cents between the strike prices, so I'd like to get a dime for this spread. If I get a dime, that means I have to put up 40 cents in margin. 40 cents is also my maximum risk. Now, when I say 40 cents is our maximum risk, I have no intention of taking that maximum risk. I'm not going to take that big hit. I'm going to buy this back if the stock is closing below 32.50, which is my short strike price. I'm going to reel it back in. So I'm not going to take the full hit. If the stock gap down $10 on some horrific news, yes, obviously you're going to take the maximum hit on that. There's nothing you can do on an overnight news event like that. But in any event, that's the strategy going in. And if the spread expires worthless, I made 10 cents. I had to put up 40 cents. That's a 25% return. So in this particular case, the stock doesn't make big dramatic moves, but it's got some nice upward momentum, and we want to lean on that. So by being down to the 3250 strike price, you can also see a red dotted line. This is one standard deviation away from the current price of the stock. The blue line is two standard deviations away from the price of the current stock. So we also have that statistical edge working in our favor. Got all sorts of check boxes marked here. When you're doing your analysis, it's important to have lots of check boxes marked. You know, the stock is above the 100-day moving average. The stock is above the 200-day. It's above the 50-day. It's breaking through horizontal resistance. Standard deviations, probability of it rallying into earnings announcements. It's in a 2-week inside of a 2-week window heading into earnings. These are all increasing my probability of success on these trades. That's what we do at One Option. That's what we do in the chat room. And that's how Option Stalker, the software, is designed to find these types of setups. So right now that spread is 4 cents bid offered at 15 cents. So at 10 cents, the stock is going to have to come in just a little bit today, but it's definitely in range. I want to make sure I get at least that 10 cents for it. And if the market starts to come back in, I think that the stock could actually start to give back some of those gains in here, and it doesn't have to come back far. If it comes back to $34 or so, I think that spread's actually in play. I think it could get filled. And so you don't need a big drop in the stock. Just a 20-cent drop in the stock should get you where we need to be. Now we'll take one more look at the S&P 500 and see what it's currently doing. You can see another tail above body here. Not a good sign for bulls. So now you're probably going to lose the halfway point of this long green candle. And once you lose that opening right there, then you're going to see us drift back down again, and we'll be back in the middle of the range. So what do we do after that? Well, we wait for the 1OP indicator to come down here, get buried, have a bullish cross, and then yes, I would be looking to get long. I like trading from the long side. I'm finding many better trading opportunities on the long side. There's some stocks that we've been trading in the chat room that have been excellent today. BYND has been on fire. Let's take a look at a couple of the names that I know we've traded. BYND, excellent. Really good daily chart there. PLUG, I know we've been trading. That actually has been excellent. You can see that. I highlighted this a couple of days ago. I love that breakout. MRVL is one that I like. Another one, really nice breakout right in here. So that's been awesome. ALLY, by the way, remember the stock I highlighted yesterday? Oh yeah, doing very nicely. That option that I suggested yesterday, making money. If you like the content of this video, please give it a thumbs up. Make sure to subscribe to the YouTube channel and turn on your notifications. That way, when I post a new video, you're going to know right away. You'll be able to take advantage of these trades during the day. You'll never miss any of these opportunities because I have picks in every one of my videos. Thanks so much. Good luck with your trading. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.